Well, everyone, welcome to our first show of May 2024. This Week in Crypto, I'm your host, Brian, alongside our co-host and founder, Maxim. Maxim, how are you after this big bounce to start my day here in the US, your afternoon, where you are?
Hi, Brian. Good morning. Yeah, let's see what we get on the data. I mean, it's good. It definitely confused part of the market. More natural would be to continue sliding down, but market never does. What is more natural is?
Right. Yeah. I mean, we've talked many times about how the prices and market caps of crypto typically move the opposite direction of the crowd's expectation. And I think this bounce today qualifies because we've seen a pretty severe amount of bearish sentiment coming from the crowd and the overall narratives on pretty much every social platform. And then all of a sudden we see this big bounce to silence a lot of the doubters. And we saw a big short funding rate going on. Many liquidations likely happened. We'll take a look at that. And it appears that this bounce is related to the same bounce that we saw when stocks opened here in the US about 30 minutes ago. In fact, it happened about an hour before stocks opened, about an hour and a half before this current time on our live stream during the pre-market hours in the stocks. And for those who haven't read yet, it appears that the jobs report is showing that there are some limitations to the amount of hirings going on. Wages are kind of stagnant, and there are concerns that without rate cuts, the jobs that are available in the US will continue to be limited. Therefore, there's this renewed narrative of rate cuts coming up, even though we just saw yesterday the FOMC deciding not to do anything to interest rates. People are already kind of getting excited that rate cuts are pretty likely now for the next one in June. So whether that's a rational take or not, it seems to have had an initial positive impact on both the stock markets and crypto markets, and could set us up for a positive June here, or positive May leading into June here. And I guess the question is how realistic is it for people to have this big positive, optimistic spin on what's supposed to be negative news about, jobs being kind of stagnant? And this is, of course, just in the U.S., not the entire world. But so many of the prices kind of revolve around what's going on with the crypto markets. So, or I'm sorry, with the U.S. State of the economy. So I guess a question for you, Maxim, is do you see this rebound kind of continuing due to this ignition point from the jobs report, or do you think that it might be a bit of an overreaction?
For overreaction is too early. There is definitely enough speculation power trying to explore to which extent. We first, if it's an overreaction, we should see it on the level of data or more like on topics or narratives being discussed. As we will probably touch it when we were going down, and what is now bottom, be temporarily or solid one. There was not so many events on the on-chain data which would normally market, like age consumed, or which would show that quite some amount of all coins have been moved, except in Ethereum, some Genesis addresses moved something, okay, but it's more like single event, and some other coins did not show it, and especially Bitcoin. Bitcoin did not show any signs of concern. Also, be honest, I haven't checked it today yet. Yeah, so I need to check when we are going through what is a big concern. So when the bottom was, what is now the bottom was, let's say, built, it's not a typical one where you see heavy liquidations, a movement of all coins, increase of exchange deposits. Some of this was okay, like you mentioned also in some points, very low transaction fees. It's partially due to the upgrade to Ethereum network, but also very flat borrowing fees on decentralized protocols. Actually can share the slide, but nothing extreme, which after so relatively prolonged decline, I would expect to be extreme. We did not see it yet. So does it mean that we will see one more bottom? Yeah, maybe. But it could also mean that now when we go up, we will probably not see so strong signs either. The only strong exception to what I'm saying, it's a social context and narrative. They were quite heavy. Yeah, if you look carefully in the conversations, yeah, we could say 80% of conversations were quite heavily bearish. 40, 50,000 expectations, me including. I was thinking, oh, cool, would be nice to get to 40. Not that I'm like it was encouraging or posting publicly, but I was saying if we get there, we'll definitely or most likely mark a heavy bottom. But okay, for me, it's like for purpose of analysis, but there were a lot of videos. And if you read media, there were a lot of conversations. And Roger Ver was his prosecution. Yeah, was positioned like, okay, we are now, or not we, but Department of Justice is in real war with crypto. This kind of things. Now, social was quite strong, negative. Okay, we can say that. But on-chain was weakly negative, was not extreme. So what do we do now from with this setup? I don't know. Let's see what we'll discover when we're going through. And maybe there will be more negative signs on-chain, which I initially saw myself. Then we say, okay, guys, that's in a solid bottom. We can go from there. We'll see.
Yeah, I think that's well said, Maxim. As we often see, rallies or drops kind of start with sentiment-related reactions that cause an initial spark in the markets one way or the other. And then on-chain tends to follow, at least from what I've experienced, where they begin to create big anomalies that either continue that rally or stop them in its tracks. So we've seen the initial reaction from the social side where they think that some news that's come out, arguably not the biggest deal of news, but news regardless, has renewed some optimism that rate cuts will happen in a month or so. The question now is whether, daily active addresses and circulation and token age consumed, dormant coins, most importantly, probably whale and shark behavior, are these all going to see some bullish divergences now to follow, now that Bitcoin has jumped back up to almost 62K at the time of this recording? It's hard to say, but we're going to try our best to navigate over the next 50 minutes or so and see what is showing up as some bullish or bearish divergences, whether this is an overreaction and we shouldn't have bounced quite this much. If we go back to our screener here, looking on the weekly, Bitcoin is still down pretty significantly, down 6% in the past week, even with this bounce. So it had been declining quite a bit. It was down close to about 9% over the past week before this bounce a couple hours ago. Ethereum is down 3.4%. You can see some assets like Stacks really just got crushed, down 20%. But there have been a few anomalies as well. Pun intended, Optimism appears to be one of them, up 21.5%. Helium, 34% up. Wormhole was a big riser, up 24%. And then if we look at the watch lists here, they're pretty much universally down. I've noticed, Maxim, layer 2s have been doing quite well compared to everything else. They're actually up 3.1%. Much of that is powered by Optimism, the highest developing asset among layer 2s right now. But you can see meme coins have still been struggling after their huge January and February. Real world assets have taken a big hit as well. So in order to see that we're back in this bull cycle, we've still got a ways to go. Even just in the past week, this bounce has not changed the fact that we are still seeing market caps shrinking right and left. We need to see a bit more of a sustained effort to really, I think, change people's perceptions into us being in this bull range once again. I still think people are going to be negative going into the weekend unless Bitcoin starts to get into that 64K or start teasing 65K range once again. With that said, actually, before we look at, I wanted to check out the correlation between, here we go, the correlation between crypto and the S&P right now. You can see it's very much evident. They both kind of climbed up until mid-March. The S&P went a little bit longer than the Bitcoin rally did because Bitcoin showed some retracing here between the 14th and 19th. The S&P continued to climb all the way until the end of March. And then they both kind of had a really rough April here with a little bit of a bounce and then this big drop right at the end of the month going into early May. And now Bitcoin is rising, as is the S&P. If I zoom in here, there we go. So you can see the big bounce that's just happened today to put it in perspective. Now, while that's going on, if you look down here in purple, I've just thrown in the Binance funding rate, which is actually quite negative right now. You can see the fact that the ratio of all of those margined and leveraged trades is showing that there are more shorts than longs right now. The shorts are actually paying longs slightly just so they can bet against Bitcoin's price. When that happens on its own, historically, there is a much greater chance of prices bouncing. Now, this was just the past 8 hours of data, that little sliver right there. I would imagine in less than an hour, when the next 8-hour interval comes out, I would imagine those shorts are gone and we're back in either even or positive range again. If we're still short, if you're a short-term trader, I would definitely check out the Binance funding rate and see what comes out there. But that would indicate that we might be in for a longer climb. We just don't want to start seeing these again, these big long funding rates. That's indicating that the crowd is getting greedy once again, and they're expecting rises to continue, and they're opening up these big margin trades once again. But I think part of what has powered crypto to see this rebound, alongside its correlation with the S&P, obviously, is the fact that people have become so bearish that they're betting against crypto at the most evident rate in like 6 months. Even just this little sliver right here being negative, that's the most negative we've seen it. Going back 6 months, it's been either neutral or super bullish all the way since mid-October even. And that's a big deal. We really haven't seen too many instances at all where the crowd was trying to make money off of Bitcoin's downfall. And now they are. So we'll see if that continues going into the weekend. I wouldn't be surprised, most realistically, if we start to range in the 61 to 63K range. But it could just be a big jump the rest
Here's
of
the thing,
today.
I often use myself for analysis. There is a good way of assessing situation after move happened. Now, let's say it's fairly, you can say it's not the most expected move, yeah? So how, because no one expected NFP in this area, it's a good trigger, if even, I wouldn't say it's the main reason. Now the move happened. How, for instance, those who are holding short position, how do they react? Do they close their short, or do they keep it, or do they increase? So we'll look the next 4 hours. Yeah, it's now will be very good time, 2 to 4 hours as the market proceed. What happens to founding rate? Yeah, and then we know approximately is it more like fear? Okay, I will get liquidated, or I'm being liquidated on my short positions, or closing it down. Then you say, okay, if shorts are panicking, then there is a good chance it will go down. Market always tries to introduce maximum possible pain, emotional or financial or both. And if they insist, yeah, and you see it's not going back to normal or going back to neutral or positive founding rate, even on growing prices. And say, okay, there will be pain for the short holders, and it will go in higher. So it's a good to analyze these kind of things after move happened. In the next typically 2 to 4 hours, there is still a good chance to extract sentiment from the market, and the same for on-chain. Yeah, we maybe come to a few metrics on it.
Yeah, I think that's you're spot on, Maxim. We're definitely going to have to wait and see how the rest of today plays out, and of course, watch our Twitter and our insights page as we give plenty of updates. Don't forget, we've got Discord and Telegram as well. Even our YouTube, we put out community posts as these big developments happen. So we'll be on top of it today to see when some divergences start to form on the 1 to 4 hour intervals. Looking at sharks and whales now, obviously many people are anticipating how the whales are going to react to a move like this. And we'll see at the end of the day, of course, but looking at just the overall trend, we've been talking about the fact that we saw the price doing this, fading since that all-time high, Bitcoin going down about 19% in market cap, quite significant. While if we just look at the shark and whale behavior, they're kind of just very gradually fading, not nearly as much as the price. I still think, as I continue to draw lines all over the screen, I still think that the long-term range, which is this, showing since late January, Bitcoin sharks and whales that hold between 10 to 10K coins, the fact that they've accumulated 182K net coins that they didn't have before is a still pretty bullish long-term trend here that we can be excited about. Even with this very small decline, it doesn't justify this big price drop that's been going on here. So that's why, I've been saying, and it's been showing up in a lot of my content, that this seems like an overreaction, and people are taking profit way too heavily, expecting that the all-time high has happened, and now we're just going to go plummet back down to 40 or 30K again. That could still happen later this year. I'm not saying it can't, but based on whale and shark behavior, they're not panicking the way the crowd is, and that's, to me, why I anticipated we'd at least return back to the 60Ks, maybe even 65K, and then maybe the whales and sharks kind of react depending on how euphoric the crowd gets again. But yeah, I think that we're still in a mildly bullish range here, and this jobs report seems to have added some fuel to the fire that we could rebound back to 65, and I like the chances of that at this time based on this chart alone. Now we've got plenty of other things we can look at here. The supply and exchanges, as I always mention, don't look at the numbers because there's some grain of salt to be taken with this bright green line, but we have seen some Bitcoin moving back to exchanges. It's just not much. This is a very small rebound, indicating some very small risk here, but the overall trend, if you look at the past 6 months, it's still gone down significantly, and more Bitcoin has moved into self-custody. In terms of discussion rate related to Bitcoin, it's stayed pretty high. We're seeing a fair amount of Bitcoin discussion, no big spikes, which would indicate a top might be forming. So I'm pretty neutral on that end. Weighted sentiment, also extremely neutral once again. You can see where a lot of the negativity was forming here in late April, but actually even as prices bottomed out and got to about 58K here at the turn of the month, we only saw a very slight amount of negative sentiment, and it's actually in slight positive range now. I would not call this notably positive at all, though. It's pretty much been neutral for about 4 days straight. So the crowd can turn either way, and we're going to be watching out for any signs of euphoria if prices still continue to bounce into the 63 to 65K range here coming up. Already mentioned funding rate. Yeah, I also wanted to look at this with you, Maxim. So the total amount of holders on Bitcoin's network, it's flattened out. The non-empty wallets since April 26th here, pretty much flat, up 19K, which is almost nothing. So you can see the range here from April 6th all the way to the 26th. There was a growth of 1.3 million non-empty wallets net-wise. And then after that, it just went flat, essentially. So that's a sign of fear. Maybe even more, I like it sometimes even more than the weighted sentiment line. Seeing when this line gets flat or starts going down, kind of like we saw here in late January all the way up until late March, where you saw a net drop of 685,000 wallets. This was a sign that the crowd was getting quite skeptical and fearful. And you see what happened to the price during this time. It was just erupting. And then finally, when it saw this big bounce in late February, that's when the crowd said, okay, I'm going to start opening up some wallets again. But you can see how, just to retrace from the all-time high here, wallets suddenly went down again. I see more bounces in Bitcoin's price and crypto's overall market cap growth when Bitcoin's net wallets are going down. And now it's flat. So if we start to actually drop, that would be a great sign. We're actually rooting for that. We don't want to see a lot of tiny addresses continue to open up with new people coming in and FOMOing and speculating that Bitcoin's going to hit 100K soon. You want people expecting that Bitcoin's going to hit 40K soon. That would be the ideal setup because it's indicative of fear and doubt in the markets, which whales and sharks then react to and scoop up more coins. And also we talked about the percent of the overall supply of Bitcoin in profit. We put out a report a few days ago that mentioned that Bitcoin's supply had fallen to about 84.5% in profit. That was the lowest we had seen since early February. Obviously, with this bounce, it's starting to jump back up again, but we're rooting for it to stay below 90, just arbitrary number there, I would say. That's a better sign than, when we saw it at 95 to 100% right here, and we saw a top here, we saw a top here, and a big top here. We'd rather wait for more Bitcoin to be introduced into the markets before we see another jump. So that's more of a long-term indicator, but one I still like to look at from time to time. All right. As Maxim was mentioning, also fees being very low at the moment. We look at Ethereum for this particular metric. You can see even right now, the average fee on Ethereum is just $1.28. Extremely low looking at the past 6 months of data, one of the lowest moments we've seen.
Keep in mind, we need to account for potential impact of the latest changes to Ethereum, the latest update as they did. We will know the new range the moment whenever it comes, some hype happens. But definitely no doubts, we are on the lower side. This metric was for some time already given hope that we can grow. It's obviously not super high demand, or let's say not extreme high speculations. And there are ongoing things. I don't know, Renzo. Okay, Renzo had dramatic events too. There is ongoing activity. Still, it's not reflected so far in gas fee. I was sending myself transactions today, yesterday, before yesterday. I didn't see these prices for a very long time. It's really cheap now. Yeah.
Yeah, it appears that the demand for Ethereum just is not high the way it was during those all-time high weeks in early March. So until
No,
that
no.
changes, there does appear to be a door opened for Ethereum
The,
and
yeah.
ERC20s to thrive.
Mhm.
So view this, folks, as an inverse indicator, really. It's not a perfect one, but pretty much the lower fees go, the more justification there is for
Yeah,
Ethereum to be utilized more and prices to
exactly.
thus rise.
It's not even about perfect, not perfect. It's not the only one. You just need to
Of
combine
course.
a few of them. Yeah, because I
Yeah.
say Ethereum is very constantly under improvement network. So you better use several metrics showing you if network is overheated or did it cool down, where transaction fee price is one of them. But then there is a lending borrowing rate and typical rate for money available market, where I usually compare our compound USDC as a kind of base rate. What you can compare like Fed rate long term, let's say between 5 and 5. In crypto now it's still a little bit higher, like 7%, and then you have higher and higher the more risky protocol is. So you can see if there is a still heat or did it cool down. And combining these two metrics, price of money, stable coins, and transaction fees, you have already quite a good picture, which is based on hardcore data. And you have better than most of other analysts out there.
Yeah, and we can take a look at how the on-chain picture is looking in just a moment. I wanted to first just check in on the ETFs here and see if there's anything going on here. And honestly, the volume looks fine, but not overwhelmingly exciting. May 1st was actually pretty low. May 2nd, yesterday, was actually one of our lowest days of volume, assuming this is, I think it's complete data because obviously today's the 3rd. This would have been 24 hours ago. Only $641 million in volume was actually the lowest day we've ever had. We'll validate this, of course, before we put out any posts, but this is combining the volume of the top 7 ETFs based on when Bitcoin ETFs were first introduced in mid-January. This is a big drop off, and perhaps there's some stagnancy going on in the ETF world, where traditional traders are becoming a bit skeptical of Bitcoin themselves after seeing all of that drop. So I'm very curious to see how May 3rd comes out after we see this big rise in Bitcoin, and people try to capitalize on the volatile markets of crypto once again. On the inflow and outflow side, though, we actually saw pretty significant outflows here. This was it looks like some delayed data, so I wouldn't necessarily say it based on these charts, but I've seen on Twitter and X plenty of posts about price ETFs starting to see more money moving out than moving in, and that's the first time that's really happened since the introduction of these almost 4 months ago. So that's worth keeping an eye on as well. Not necessarily a bearish indicator. In fact, it could just be a reflection of the crowd becoming a little skeptical on the ETF side, which could potentially boost prices. So I'll put out some research posts about this coming up soon, but I wanted to just put a quick eye on that. All right, now moving over to the on-chain side of Bitcoin. So we can see, as Maxim said at the beginning of this call, declining transaction volume, not much going on the on-chain side at all. Certainly less if I put like a 7-day indicator on transaction volume in USD. We were seeing about $29.61 billion per day, near the all-time highs here when it peaked. And now on the 7-day average, we're down to about half of that, $13.63 billion per day. So certainly less and less on-chain volume on the daily scale going on Bitcoin. On the daily active address side, same thing. You can see it peaked here in early March, 1.17 million unique addresses in one day. The latest day we saw was just 754.7K. That's a pretty sizable drop. Circulation, same thing. I mean, we're definitely seeing the amount of unique tokens moving on the network going down, moving low, and that is a concern with the NVT, which measures the amount of circulation versus the overall market cap. This would imply that it's becoming a bit more bearish. So the network does need to pick up the utility a little bit more. This is kind of reflective of the overall amount of interest. We're seeing less engagement per posts, as is everything else in crypto right now, just because there's been a big drop off in interest level toward crypto ever since the all-time high occurred here. People almost too quickly decided, okay, it's time to jump out of crypto. There's no chance of recovery. And especially below 60K, a lot of sell-offs were undoubtedly happening. We saw shorts, and now maybe people are going to start to regret it if we continue to bounce a little bit more. MVRV. So obviously with today's bounce, we saw a bit of a rise. We were reporting right when May 1st started that we were seeing some pretty juicy 30-day MVRVs that were below 10%. You can see right here, it was at negative 11% just about 48 hours ago. And now because of this bounce, it's back up to negative 3.5%. Still below zero, meaning there's less risk than average if you were to open a position or add on to a position. And then the 365-day MVRV is back up to about 25%. We'd like to see the 365-day MVRV get down to zero or even below zero, which we really haven't seen at all since late 2022. But if that happens, we're in a really great buy zone. Because of the bounce that's just happened, though, this is like it's showing like a 3.5, 4 out of 10, with 0 being bearish and 10 being super bullish. We're slightly in the bearish range once again because the long-term MVRV is up high and the 30-day MVRV is almost back to neutral. Whale transactions pretty much going the same route as daily active addresses and circulation. You saw there was a little bit of a blip here at the end of April, which did point to the possibility of there being some accumulation happening, but it wasn't tremendous in a way that would get us excited about whales ready to pump the prices. And we already looked at how the overall collective amount of BTC of 10 to 10K BTC wallets hasn't really budged. It's actually moved just slightly down. So at least there's been a little bit of sign of life, but not much on the Bitcoin end. Same with $1 million plus transactions here. Ratio of transaction volume and profit to loss. So as you would imagine, there has been more loss days than profit days, which is a good thing. That would indicate we're getting close to bottoms. Whoops, did not mean to hit that button. So if we look at the past 3 months, anything below this gray line indicates a day when we were seeing more transactions at a lower price than when those wallets got them than at a higher price. We want to see that. We want to see a lot of these with space between the line and the bar because that indicates we're getting close to a bottom. We don't want to see a lot of these high spikes indicating there's way more profit transactions happening than loss transactions. Right now, we're pretty much right at neutral. I'd watch for the end of today to see if there's a bunch of people who bought the dip at 58K who are suddenly selling off really quickly. I doubt that'll be the case. I don't think the trading crowd will react quite that quickly. And I also don't think there were that many buys at 58K based on our data indicating the very negative sentiment going on there and more people wanting to sell. Regardless, though, keep an eye on this. I think some more low transaction volume ratio bars here would be a very good sign heading into the weekend that we might be seeing another bottom. Mean dollar invested age. So this is an important one. We saw lots and lots of declining in this mean dollar invested age line as prices were erupting throughout the first third of the, or first quarter of the year. And then right around April 1st, it started to flatten out and is starting to rise once again. I would keep a very close eye on this. We don't want to see the line continue to rebound and go back up to the same levels of 600 days plus that we were seeing in February. We'd rather it at least stay flat, ideally start to go down again, because this downward movement is one of our best bullish indicators for the long term, as it indicates that there is stagnant coins moving out of those whale wallets and into circulation once again for the regular mainstream crowd to move between themselves. And that helps trigger more activity on the network. Right now, that's no longer being seen for the past month. But during that 6-month rally between mid-October up till very late March, we were seeing tons and tons of old coins moving back into circulation. And that's what we would want to see to continue to have a justification to deem that we're in a bull cycle here. And then we talked about this internally, Maxim. This was one of our first negative realized loss spikes here on May 1st. We've had in a long time.
This was small one, small one, yeah.
Right.
Ideally, it's followed by realized profit. You see what we have, or what we had a few weeks ago. What was the date? 19th of April. So there were, no, 19th of April, yeah, exactly. So here there was a negative, positive, not big, but good enough to spark some growth. So this is what you want to see. If whatever happens today, we will see it during the day or after the day is over, this kind of amplitude, at least this kind of amplitude. This is a good support for growth. By the way, for anyone who is listening, keep in mind that the way how metrics are built, so we need to collect the data and we have special scheduler, so they are recalculated kind of every half an hour. So it's possible maximum that price movement happened, on-chain data is collected, but metrics are recalculated roughly half an hour after. So keep it in mind when you check it. And we need to see the spikes to at least the spikes, but even more, because the market move even lower. So there should be increased level of concern. If we don't see it, and there is no realized profits on the way now, what we experience now increase, I'm afraid the next way is down. Yeah, but we will see by the end of the day. It's one of my favorite metrics.
Yeah, and it really goes short term too. You can look at it just on a 5-minute scale if you really wanted to, and zoom in to see where the spikes are happening. And the last big spike happened really on April 27th, and then there was a negative spike here on May 1st, and that did appear to correlate pretty closely with the bottom here. You can see where it happened, and now we're just seeing a lot of very tiny realized profit and loss spikes in both directions. So as Maxim's alluding to, if we start to see a big realized profit spike, that would be a sign that the 60Ks may not be lasting very long. All right, social volume, as expected, we are seeing a big spike in discussion rate again, likely due to the bounce and people trying to figure out why Bitcoin has suddenly jumped back up to the 61 to 62K range. It's not significant enough to see that there's a ton of focus on Bitcoin again, but it's showing signs of life, and that's probably a good thing. I don't think that this is necessarily a FOMO or euphoric spike. It's simply a recognition that Bitcoin has moved back into a very short-term positive momentum range. And then weighted sentiment, if we look at the weekly, we can see here this big negative spike over the past week between April 24th and 30th. and then it's actually moved slightly back into positive range just in the past couple days, likely boosted by today. But you can see what this kind of spike does. It often correlates with bottoms. We've seen it before, even the week after the all-time high when we saw this big drop. Of course, there was negative sentiment, and then we saw a bit of a rebound here. And it actually stayed pretty negative as we ranged, and Bitcoin made its way back above 70K a couple times and then finally dropped back off. People started to get optimistic here, and then they were punished with a big drop during this negative week. So watch to see if the crowd starts to lean one way or another. Neutral doesn't really give us much information, but if they get extremely bullish like 2 weeks ago or extremely bearish like 1 week ago, that's a great sign that you can be a counter trader and move the other direction. And then finally, RSI. It does appear that we're in a very slightly bullish argument here for the RSI because 50 is average. We're at 43 now. Generally, prices are more likely to bounce when we're below this line and more likely to retrace when we're above this line. But this is a very, very slight divergence, so I wouldn't put too much into that. Okay. On the social end, before we get to some questions, I did want to point out some of the trending words here. We see that OMNI is a new type of blockchain that's combining tech from Cosmos and Ethereum, and it's being talked about quite a bit here. Maxim, do you have anything you want to mention about OMNI? I know you've kind of kept an eye on it a tiny bit, right?
Not nothing special. Why?
I know why it's in the #1 spot. I was just curious if there's, a bit too much discussion and overreaction to it, or if it being the #1 trending keyword might be appropriate right now.
No, I think it is appropriate. It's just maybe we're not aware. Need to read, even though summary is quite short. Now they did something good for Bitcoin, I guess. Yeah, we give them another hope to build something of top Bitcoin, which is good. I mean, me personally,
more competition, the better.
Yeah. I still believe in what Ethereum is doing, but I also quite positive about Bitcoin. If even I don't believe there is, I know so Bitcoin ordinals is runs. We'll see. It's always unpredictable what will work.
And then we have Friend.Tech here, which is
the airdrop conversion. There is quite a lot of drama around. We could actually. I was thinking. Anyway, it's a separate request. This launch and drama and negative sentiment could mean we might experience rebound and growth. But I didn't delve or investigate deeply enough. But from on the surface, what I read, this is quite negative sentiment. So many people are not happy the way they did. Airdrop or a launch as a conversion, it's not working and you cannot claim airdrop, or people complaining typically, and price crashed. Good setup, normally one of classical setups for price, just to do 3x in the next week or two, but need to search more. If whoever on the stream, if you have time, I would recommend research more in depth some of the key metrics for Friend.Tech. Looks like a good case because it's also on place #2 in our top trending topics. Not top trending tokens or coins. It's a total coin. It's a total topics, and to get the top 3, it's not an easy task.
Right. You have to have an extremely high increasing percentage of discussion related to the keyword compared to usual. So Friend.Tech is being talked about a lot. We don't usually cover airdrop related material too much, but if it continues to get just an enormous amount of discussion heading into the weekend, perhaps you guys will see a little bit of a deep dive into this in the next few days. What was a big deal was Coinbase's Q1 earnings that came out super impressive, which is good for crypto, in my opinion. I think obviously it's been aided by having a bit more of a monopoly here in the US due to FTX not existing for well over a year now.
But
Coinbase,
probably also they published the recent financial results, which are surprisingly, I mean, depends how you look at it, but generally good, quite strong.
Mm-hmm.
So
Yeah.
probably it's also quite a big topic. Yeah, I saw it in a few places.
Ryan Armstrong is in a good spot at the moment and appears to be relatively out of drama compared to many of the other recent, founders of exchanges. I saw CZE was just sentenced to some jail time, but Coinbase overall, relatively speaking, no big exchanges out of drama completely, but relatively they're doing quite well and have maintained their trust within the trading community, which is good to see. You want traders to be able to trust at least one exchange, especially in the US, that they can rely upon and feel like their money is safe. So seeing positive earnings reports from the top US exchange is overall a good sign for crypto. All right, that's just the top three. We'll stop there. I did want to point out Tether is the top trending token right now, and it's related to Binance futures and KuCoin futures. I'm not so sure it's related to concerns about the overall stability of Tether, but there always is a bit of a debate around the number one stablecoin in crypto, especially when it becomes the top trending asset. And it does look like the bearish summary here, according to our AI report, is pointing to that a little bit. It says the main reasons to be bearish on Tether include concerns about its stability and transparency, the fact that Tether, the company behind USDT, is tracking transactions in the secondary market to identify illegal activity and sanctions circumvention raises questions about the legitimacy of the project. Additionally, the lack of clarity surrounding the withdrawal process from wallets to exchanges, as mentioned on Reddit and Twitter, may indicate potential. Max just mentioned that there was $5 billion in profit, and that has probably been a large portion as to why it's being discussed so much. But yeah, it does look like there's controversy and the issuance of over $12.5 billion. So this is usually a FUD topic. I'm not surprised to see that the Tether has been discussed at this level while prices were bottoming out. Maybe they'll stop being talked about so much now that we're in bounce mode and people start looking at, meme coins and more speculative assets again as they try to capitalize on this rebound. But for now, it's the number one trending token. And I wanted to point out the fact that you've got resources here you can check out on our trending tokens dashboard. Just go to our social trends page and click the third one over here, trending coins, and you'll see the same metrics here that I am. You can see XRP at 5, Bitcoin at 6, 2 big caps there, and Ethereum at number 10 as well. So some of the big boys are certainly being discussed at high rates at the moment. I also wanted to point out the MVRV divergence model. Even with this bounce, big opportunity zones still presenting themselves. P network, very high underbought spike here. Frax underbought, Bella protocol underbought. But the vast majority of these go down the line. Altcoins do appear to have an argument to go on a run in the near future based on the midterm time frame. Just keep in mind that'll depend on Bitcoin's own stability to at least range for a while. If it climbs, there is certainly justification for altcoins to outpace Bitcoin for a little bit based on this. Bitcoin itself appears just slightly over neutral. So just keep that in mind. Based on the math, we could be due for a bit of a relief rally coming up here, according to MVRV. Okay, with our final 10-ish minutes or so, Max, if you want to say any questions that might be popping up in our chat, that would be great. Sure. Let's take a look at Lido DAO. This template here. So Lido has definitely corrected like most assets out there. If we go to the past, we'll say 2 months here since March 2nd, its price has corrected about 36%. That's about on par with what a lot of altcoins have done. So it doesn't stand out as a big outlier. Its trading volume has declined a bit, but not quite as much as some other altcoins. Transaction volume has dropped significantly. We saw this big spike here as prices were falling in mid-April. And if we look at just the 7-day indicator, so it peaked here on April 15th with about 30 million Lido on-chain transaction volume per day. And now it's down to, yeah, five and a half. So it's gone down almost sixfold since that time. Big drop in utility, and that seems to be matched by daily active addresses as well. We did see a bit of an increase here at the very end of the month, but it's kind of dropped back down. Circulation, very non-existent. The amount of unique Lido being moved on a daily basis is down to what looks to be a 3-month low right now. So dried up utility on the network right now for the 52nd ranked market cap asset at this time. MVRV, this looks like there's something off here. We see the 30-day, yeah, this can't be right. We'll have to skip MVRV, unfortunately. I'm curious if it shows up on our model differently. Lido DAO. Okay, it's right on this scale. So it's in an underbought territory on the midterm time frame, kind of in the middle of the pack. But this does indicate that buying right now or owning Lido DAO, you're doing so at a much less risk than usual historically. So certainly a justification to have Lido DAO according to average trading returns when you're measuring up your timing right now versus the average trader's results. Whale transactions have really dropped off. You can see a dramatic drop right after April 14th and 15th here. And we're only getting a handful of transactions that exceed $100,000 in value per day right now. $1 million or more. We haven't even seen a single transaction above this value since April 28th when there were 2 of them. So very little whale activity, but let's take a look at the context here. The price of Lido is at $2.11 at this time. Let's take a look, 10 to 100. We'll go a little higher than that. That's mostly dolphins. So if we start at 10 to 100K, so this is about $20,000 to $200,000 worth of Lido owned. They have been moving up, moving in the right direction according to the overall amount of supply. 100K to a million, they've been moving down over the past month. A million to 10 million, they're kind of flat. And then 10, yeah, these are mostly going to be exchange addresses. So if I combine these 3 tiers, and I'll just take these off. So yeah, it's pretty flat at this time, 10K to 10 million Lido coins. They did jump from April 8th until now, but this reflects the lack of overall whale activity. They've barely moved since April 16th here. So we'd like to see that it at least chooses a direction in the near future. I recommend looking at those 3 tiers though, and you'll get a pretty good idea of where Lido is going to go next. Let's see how much price correlation this line has. Yeah, definitely correlation. They dropped off here beginning in mid-February, and you can see how the price kind of fell along with the $10K to $10 million tier here, or 10 million LDO tier here, and then they started to bounce and price kind of neutralized along with the rest of the markets because of Bitcoin's price direction. Mean dollar invested age, not much dormant movement at all. It's kind of been climbing back up over the past month. Go back a year, let's see. Yeah, there were certainly some times where some dormant LDO was being circulated, but it never really got into this cycle where the mean dollar invested age was moving down. That would be what we're rooting for if we're bullish on LDO. Network realized profit loss. Let's just look at like the weekly. Now, there was a big loss spike here the first week of April, and that did help justify a bounce. You can see this loss too. This happened right before the big bull cycle for all of crypto, so take this with a grain of salt. But yeah, these weekly realized profit and loss spikes do seem to correlate with price quite well. So look to see whether this latest line here starts to get into a positive range or a negative range. If you want prices to continue going up, you want to see that other people are realizing losses, and that would help substantiate the argument of a price growth here. Supply and exchanges, yeah, there has been some growth here. A lot of people moving LDO to exchanges here the first couple weeks of April, and that undoubtedly contributed to a drop in LDO's price, and it's been pretty neutral ever since. Not much discussion at all related to LDO. It's very low at this time with social volume and social.
Maybe you can shorten time frame so that we don't see this on the left side big social volume.
Yep.
No, I mean, so not so much. It was too much on the left side. I think it's, yeah, 6 months you can take.
Okay, 6 months.
Yes, so we can see the, yeah, exactly the recent volumes. Okay. Yeah, nothing dramatic. Mm-hmm.
Yep, just a tiny blip the last couple days, but nothing compared to the big moments where it was being discussed in mid to late January. And that, of course, correlated with the big local top that occurred here on January 9th. Look for these big social volume spikes as direction reversal indicators. And right now, we're not really seeing any signs of that. Weighted sentiment, also very neutral, even if we change to 1 day. Yeah, I mean, this is mostly just due to a lack of discussion here, these long stretches where it looks slightly negative. It finally had a small blip here and here where there was a bit of positivity, but it's back in pretty much slightly bearish territory once again, which can be a good thing. Lack of focus on the asset often allows the price to rise with little resistance due to the lack of attention on it. And then development activity, it's still looking quite healthy. It had a little bit of an increase in development in late April and has fallen back to kind of a normal range here. RSI actually a little above 50, so there's a slight argument that it's a little risky still. We'd like to see that it is below this line as an ideal moment where you could add on more. And then total amount of holders has been mostly rising slowly throughout the past month. Nothing too significant here. It looks like it's at about its normal pace of growth. And that's LDO, folks. I hope that was a helpful recap. It looks like maybe there's some slight bullish arguments. I think the most important thing we saw was the fact that LDO DAO on the midterm time frame is underbought, according to the 30, 90, and 180-day MVRVs combined. So not a bad sign there. Like I said, with all altcoins, though, it's going to depend on Bitcoin stabilizing and being able to range maybe at the 60 to 65K level for a while, or potentially climb, which would be even greater. But I think that's a good recap on the markets today. Maxim, do you have anything final you'd like to throw out there for our wonderful community?
Yeah, the next 3 hours. Let's see if we get a movement of first realization of profit loss on Bitcoin. Second, behavior of small hodlers on the gain on Bitcoin if it continues small decline. And I will personally look more into derivatives data and borrow lending protocols, but it's a kind of everyone is doing it in its own way. I will not go into much details, but this is a summary. It's interesting that it's good that now we have rebound. Let's see the reaction to it. Yeah, is it rational or irrational? Yeah.
Absolutely. Well, Maxim, thanks so much for joining today. And as always, I want to thank Max Baresh for running the stream. And let us know what you think, folks. Feel free to leave some comments. Let us know how we're doing on these streams. Let us know what your take is about the markets. And we'll take all of that feedback. And, we really do digest everything you say and apply it to how we can continue to improve and provide the best content possible for everyone. So thank you to everyone who tuned in live or are watching this on replay. And we hope you have a wonderful weekend ahead. Take care, folks.
Yes. Yeah. Keep going. Talk to you next week.
Talk to you soon. Bye-bye.